Palantir continued to show its presence today. Price shot up again. However, skeptics are still there. Why? Well, it seems like something big happened today, and the US government is at the center of it. However, analysts are dropping their signals, and Palantir's price might soar even further. What is happening? And what on earth am I even talking about? Well, let me explain. Disclaimer. Palantir is on fire again, shooting up to around $117 per share. It's another insane surge, proving just how dominant this stock has been lately. But here's where it gets interesting. Earlier today, it actually started dipping around $110. With yesterday's close at about $112, that little drop was enough to shake some investors. And you already know what happens when a stock starts slipping. Panic kicks in, the bears come running, and short sellers start licking their chops. One analyst even jumped on Twitter, saying, "Started a short position at 116, stupidly overvalued." A pretty bold call, considering how unpredictable this stock has been. Will he be right? Or is Palantir about to make short sellers regret their move? And here's the thing. Despite the wild surge, people aren't exactly celebrating. There's still a lot of hesitation in the air. Some investors are frozen, unsure whether to buy in or wait it out. And in the worst cases, people are straight up selling, cashing out while they can. But why? If Palantir is climbing like this, why isn't everyone just jumping on board? What's making investors so nervous? Well, turns out something big just went down today. And it might just explain all the chaos we're seeing in the market. If you've been following our recent videos, you already know how Elon Musk and Donald Trump have been making government spending a hot topic. Both of them have been pushing hard for efficiency, calling out wasteful budgets, and demanding more transparency, especially when it comes to high net worth individuals in Congress. They're not just casually mentioning it either. They're being vocal, direct, and persistent, making it clear that they want real changes. And here's where things get really interesting. Today, something massive just shook the Palantir community. If you thought the volatility was intense before, just wait until you hear what's happening now. This could be a game changer. It turns out that some US politicians just made some seriously suspicious moves on Palantir stock. And here's the crazy part. Their investments shot up by 50% in no time. That's not just lucky timing. Analysts were the first to catch on to this, and now people are starting to connect the dots. See, congressional stock trading has always been controversial. Senators and representatives somehow manage to pull off market returns that regular investors could only dream of. And it's not because they're stock market geniuses. It's because they have access to information the rest of us don't. The problem runs deep. Politicians regularly invest in industries they're supposed to be regulating, which sounds like a massive conflict of interest because, well, it is. And to make things even worse, the rules around disclosure are murky, meaning they don't even have to reveal exactly how much they're investing. If they break the rules, the penalties are basically a slap on the wrist. Two congressmen, one Democrat and one Republican, both made big investments in Palantir. And guess what? They both turned a hefty profit in record time. James Comer, a Republican from Kentucky, was the first to make a move, buying shares on January 21st. Then, just 3 days later, Gilbert Ray Cisneros, a Democrat from California, followed with his own purchase. That alone is eyebrow-raising, but it gets even better. Both of these guys sit on key congressional committees that deal with the exact kind of government contracts that fuel Palantir's revenue. And surprise, surprise, both of their trades became massively profitable almost immediately. Since Comer's buy, Palantir stock has jumped nearly 59%. Cisneros? His investment is up nearly 47%. Now, maybe that's just a lucky coincidence. Or maybe it's yet another example of politicians making money off insider knowledge while regular investors are left guessing. Either way, people are starting to take notice. This kind of shady congressional trading is exactly the kind of thing that makes investors nervous. When news like this breaks, it raises a lot of questions. Was this just a well-timed trade? Or did these politicians have inside knowledge? If traders start thinking Palantir's price surge was fueled by political moves rather than real, sustainable growth, they might hesitate to buy in. Or worse, they might start selling off their shares before things take a turn. And when uncertainty takes over, the market reacts fast. Panic selling, shorting, and wild price swings can all come into play, making Palantir's stock even more unstable. This is exactly why Palantir's price can be so shaky. It's not just about fundamentals or earnings reports. News, rumors, and even political involvement can send the stock flying or crashing in an instant. Investors love growth, but they hate unpredictability. And right now, Palantir has plenty of both. But here's the thing. While some investors are panicking over this, others are still insanely bullish. In fact, some people think this could be the beginning of something huge for Palantir, with the potential to send its price skyrocketing to $500. One analyst even broke it down in a tweet saying, "Institutions have been accumulating. I believe the big boys are buying at $100 because they are playing for $500 in the next 5 or so years and have the firepower and patience to buy the dips or any major drawdowns." The smart ones know that Palantir is the only AI software company with an ontology. Basically, what he's saying is that the big players, institutions with deep pockets, aren't just randomly buying in at these levels. They have a plan. They see the long-term potential, and they're willing to ride out any dips or volatility because they believe Palantir is one of a kind. So while the short-term uncertainty might be making some people nervous, the long-term bulls are looking at this as a golden opportunity. And if they're right, $500 might not be as crazy as it sounds. And this might actually be true. While retail investors are freaking out, shorting Palantir, and calling it overvalued, the big players, institutional investors, are doing the exact opposite. For them, every dip is just another chance to grab more shares at a discount. And just today, we got confirmation of that. A massive Korean institutional investor just made a huge move on Palantir. Korea Investment Corp, a fund managing over $110 billion, just increased its Palantir holdings by more than a quarter, adding over 280,000 shares. That brings their total to well over 1.4 million shares. And while retail traders who panic sold are now running around trying to justify their decision, talking about overvaluation, worrying about shareholders, institutions aren't even flinching. So while some are busy stressing over short-term noise, the ones playing the long game are stacking up, unfazed, and waiting for the real payoff. And here's the craziest part. One major institutional investor that had completely pulled out of Palantir before just made a shocking comeback. They sold everything, walked away, and now, out of nowhere, they've jumped right back in with a massive position. This bombshell was revealed in a tweet. The monster trader Norges Bank is back on Palantir. For context, Norges Bank, which manages Norway's sovereign wealth fund, exited its entire Palantir position back in September 2024. They were completely out. But according to the most recent 13F filing, they just bought back in. And not just a little. We're talking nearly 18 million shares, worth over $2 billion. This is huge. Norges Bank doesn't just make random trades. They have access to some of the best analysts and data in the world. And when they make a move like this, it means they see something big coming. It's a complete 180 from where they were just months ago, and now people are wondering, what do they know that the rest of the market doesn't? And you know what's really interesting? This whole Palantir is overvalued argument from the skeptics might not even matter. Because according to one Twitter analyst, higher valuation isn't necessarily a bad thing, especially for a company like Palantir. He pointed out something most people are missing. Higher interest rates are actually bullish for Palantir. Why? Because a huge chunk of the company's operating income comes from interest. In other words, the higher the rates, the more money Palantir makes just by sitting on its cash reserves. So while some people are panicking about valuation, others are seeing this as yet another reason to stay bullish. Institutions are loading up, big investors are making moves, and the company's financials are actually benefiting from the current market conditions. In the long run, Palantir's stock movements won't matter, because this company is built differently. It's deeply embedded in government and enterprise, securing long-term contracts that competitors can't touch. Then there's its CEO, Alex Karp. Unconventional, fearless, and focused on the future, he doesn't play Wall Street's game, he plays his own. And let's not forget the community. Palantir isn't just another stock. It has die-hard believers, from big institutions to retail investors who see the bigger picture. Short-term volatility? Inevitable. But long-term? Palantir is built to win. But what is your opinion on this? Comment down below. If you are curious to find more, then make sure to click on one of the videos you see on the screen. And with that, we come to the end of this video. If you enjoyed the video, then turn on the notifications bell on this channel. Missing an important Palantir update might make you lose money, so don't risk it. Also, please share this video with as many people as possible. Let's get this news out there.
Finally, something that we've never seen before. Today truly marks a historic day. All the pieces just came together. The things they hint us at will blow your mind. We even got confirmation from the Shiba Inu dev team. But what am I even talking about? Well, let me explain. Disclaimer. Today we've got some incredibly exciting news to kick things off. Jason Williams and Yazan, two well-known Bitcoin analysts, have just set an ambitious target of 50 cents for Shiba Inu in this bull market. This bold prediction has certainly stirred up a lot of conversations within the crypto community. Many people are skeptical about Shiba Inu even reaching 1 penny, given its massive supply of over 500 trillion tokens, which makes such a price seem unattainable. And now, we're hearing a prediction of not just 1, but 50 cents during this bull run. It sounds unbelievable, right? However, this prediction isn't just a wild guess. It's backed by thorough analysis. So stick around as we dive into the details behind this forecast. Alright, so just today, Williams and Yazan have taken to social media to boldly assert that their target for Shiba Inu this cycle is 50 cents. This ambitious prediction is part of their broader analysis of top cryptocurrencies, including Bitcoin, Ethereum, and XRP. Yazan, in his post, suggested that Shiba Inu could hit 50 cents. If Bitcoin soars to $777,000 this season. Meanwhile, Williams sees the 50 cents mark for Shiba Inu in the bull market as a possible target for Shiba Inu this cycle. As of now, Shiba Inu is trading with 4 leading zeros. Essentially, the Bitcoin analysts expect Shiba Inu to eliminate 3 more zeros by 2025. For Shiba Inu to achieve this, the token would need to rally by a staggering 200,000% within the next year. To put this into perspective, such a monumental gain would definitely be a record-breaking feat. Gains of this magnitude are huge, making this prediction particularly important. Shiba Inu is trading at 50 cents. Shiba Inu could surge by over 200,000% would set a new benchmark in the industry and potentially redefine what's considered possible for cryptocurrency growth. But can it actually hit it that soon? Well, let's take a look at other analysts. Interestingly, Shiba Inu experienced an astonishing surge of over 880,000%. Following the Bitcoin halving in 2020, which led to a bull market that ended in 2021. While there's plenty of optimism about Shiba Inu's potential to recreate this meteoric rise, most analysts predict a more modest outcome. They generally expect the coin to shed just 1 zero and hover around 3 zeros, or slightly higher. For example, Donna, an analyst famous for her accurate Dogecoin predictions, believes that Shiba Inu's price won't go beyond 3 zeros this bull season, and the reason for that is not something you would think of. It's actually a pretty interesting one, something people often overlook but should pay more attention to. And that's pretty funny. Imagine you're trying to lose weight and you think the only reason you're not shedding pounds is because you're not exercising enough. But when you dive deeper, you might discover other factors at play, like diet, sleep quality, and stress levels. It's not just the lack of exercise. It's a combination of various elements that are affecting your progress. Similarly, with Shiba Inu, while its massive supply is an obvious factor, the real story involves a more complex interplay. So what is it about? Well, let's take a look at the real story. To reach this price point, Shiba Inu faces a major hurdle. A final sell wall at around 406, which is just about twice the current price. At this level, there are 92,000 addresses collectively holding almost 30 trillion Shiba Inu tokens. Should the price rally to this point,